Alright, good afternoon then everyone, as we are at the end of another week of trading. We'll flick across the calendar. Relatively quiet week this week across financial markets. Been somewhat difficult trading conditions across the majority of the week, apart from a couple of assets, but certainly not the levels of volatility and amount of action that we had in last week's trade. We'll start, as I said, with the calendar, but really we're lacking economic data this week, lacking fresh fundamental drivers, lacking any fresh geopolitical headlines from maybe the Middle East or something like that. Yeah, it's just a lack of volatility across the major asset classes for the most part this week. Nothing on Monday. There's PMI out of Canada didn't really impact too much. Slightly below consensus, but we'll flick across some charts now and we'll have a look in a minute. The RBA we got on Tuesday. The Australian dollar got whacked off the back of that trade balance down. The trade surplus narrows in China, which was a negative for the Australian dollar. That was then solidified by an interest rate hike, which is maybe a bit confusing to some people as to why we get a hike and the Australian dollar sells off the back of it. But they did suggest, or they did tell us on Tuesday, that interest rate hike is likely to be the last one. So Michelle Bullock, one more interest rate hike, and hopefully to cool down inflation. So bar any spike higher in inflation, that is it from the RBA. Into Jerome Powell on Wednesday, who declined to speak about monetary policy on Wednesday, so absolutely nothing out of that. Last night, though, did somewhat push back on some of the comments he made last week. Last week, he did suggest that the September dot plot may now be viewed as incorrect, which suggests no more rate hikes. He then comes out last night and say rate hikes are still on the cards if economic data continues to be strong and inflation remains stubborn. So he's just one of them. He's one of the most neutral people you'll ever get. As soon as he says one thing, he'll back it up with something in the opposite direction. Really doesn't like spooking markets. So yeah, I mean, you can't really listen to too much what he says. I mean, I'm sort of the opinion you can't listen to too much what the central bankers have said over the last couple of years. They got a lot of things wrong over the last couple of years. I wouldn't back against them doing more things wrong in the future, but last week we're finished with interest rate hikes. This week we may get another hike. Yeah, it's just typical. Jerome Powell says one thing, then says another. Sort of like a football game. First half, team goes 1-0 up. Second half, other team equalises. Therefore, you end up 1-1 at the end of the game, and it is meet back in the middle. So kind of pushed back last week, which had a bit of volatility last week. That has continued somewhat into today. Not a massive amount into today, but we'll have a look at it once we get around to the charts now in a minute. Some GDP figures out of the UK, seemingly avoiding contraction in Q3, which is a positive for the UK economy. 0% growth, though, that's not really a positive. So slight bit of a positive, beating consensus, not contracting. But ultimately, at the end of the day, it's a bit of a nothing print there. It is backwards looking as well. But nice to see that the UK can avoid a technical recession for a little bit longer. US dollar, though, some US dollar strength. Your Aussie and your Kiwi have had somewhat clear direction, certainly across the course of Monday and Tuesday morning. Your Kiwi's just chopped sideways. Aussie's grinded lower for the most part this week. But really, you can look at dollar CAD grinding higher, but really that's where it opened up here on Monday. So Monday, a good bit of dollar strength, but coming into Tuesday, grinded higher. Wednesday, grinded higher, then back lower. Then Thursday, a bit back higher. Really lacking a bit of direction across that. Euro's been down, then up, then down, then up, down, up, then back down. So not a great deal to be seen there across euro dollar. Hanging on to the support level, which we did look at earlier on in the week, but ultimately your Aussie and cable are the ones with the clearest direction this week. But I think the most interesting move, let's say them two are the ones with the clearest direction this week. The ones with the clearest direction this week is dollar yen, and I think that's the most interesting move across markets this week. If you have a look at last week. Obviously, you had a substantial run to the top side off the back of the BOJ back on Tuesday, the 31st of October. That was then sold back into and completely reversed, right? Completely reversed with some weak data points. Obviously, you had the Fed then up here last Wednesday, which did suggest back then interest rate hikes were done. You then come into non-farm payrolls that then sold off aggressively after that. But markets seemingly want to test the Bank of Japan's resolve again. This black line 151 946 is the level that they did intervene at back in October of last year. They seemingly want to go up and test that level again. How that ends up playing out, probably in some dollar yen downside and some Japanese yen or broad-based Japanese yen upside. But you're not going to want to buy that up there. Most people wouldn't have wanted to buy it the whole way up here. Yeah, but it's a pretty tricky one up at these levels in dollar yen. But that's the clear direction this week. Ultimately, do you want to keep buying it from here? No. Bank of Japan will probably step in at some point. They did step in earlier on to keep Japanese government bonds, the 10-year yield suppressed. They purchased bonds to keep the yield below 1%. That is then a negative for the Japanese yen, as it does not allow the rate differential to decrease between the respective nations. So as long as that remains subdued, dollar yen weakens, or dollar yen strengthens and the Japanese yen weakens. What that means then going forward is probably some fresh intervention from the Bank of Japan at some point. Equity markets choppy across the board to begin the week. Yesterday, though, off the back of Jerome Powell speaking, strong downside across the S&P, the Dow Jones, the Nasdaq and the Russell. Russell's got a good bit of a downtrend to it over the course of this week, but ultimately pretty choppy trading conditions across stock indexes to begin the week. Really a clear direction came last night. That's really the only proper move you've had over the course of this week. The Nasdaq popped higher on Tuesday. Not really much of an explanation as to that, but ultimately, as you can see, pretty messy charts across the board this week. The DAX fired higher on Wednesday off the back of weak retail sales from Europe on Wednesday. Did push higher pretty aggressively off the back of that, had a bit of a pullback and then went again, likely due to the fact that it solidifies the ECB's reasoning for not hiking interest rates again. ECB interest rates are lower than that of the Fed and the Bank of England, makes European stocks potentially a more attractive proposition going forward. You're still expecting the full pain of interest rate hikes to take effect in America. Certainly Europe are already feeling the effect of that, so they're likely to remain lower in Europe than the rest of than the UK and the US, for example. Does that make European stocks a little bit of a more attractive proposition? You'd have to imagine that the Europeans are closer to a cut as well as the other two. So we'll see how that plays out, but a bit of upside in European stocks over the course of this week. That's where your clean direction came from, but it's not exactly a clear-cut move, is it really, at the end of the day? Yields lower to start the week and then moved higher aggressively yesterday off the back of Jerome Powell. His 2-year yield through the highs back above 5%. Yield curve still inverted, shorter dated interest rates still higher than longer dated interest rates. Does not point towards a healthy economy going forward, which is a lot of market participants think into next year. Oil, gold, bit of downside. Gold downside on the back of yields pushing higher did help gold downside, but it's kind of just been trending lower gradually for a while. CFDs on crude oil, I don't know why I'm reading the name of the ticker here, but oil downside. I had a report out of OPEC on Tuesday suggesting that their output, or their exports should I say, is down. Right, that's not due to them increasing production, that is due to a lack of demand. The lack of demand for oil causes the price to move lower, and that report did spark some downside on Monday night, and then followed through into Tuesday. From that report from OPEC did as I said, spark some downside in the price of oil. Oil is kind of languishing down here at the lows, looking like it wants to attempt a bit of a recovery today, but ultimately demand for oil is lacking globally, with Chinese inflation as well. Probably should have said that earlier. Negative, below consensus, below previous. Again, just a struggling Chinese economy over this week. Negative trade balance figures, negative inflation prints does not suggest for strong demand in China, which obviously are a large consumer of oil. But the way I'm talking this video is probably how I've talked all this week across the different videos, and also to students as well. Tricky trading conditions this week. Not a lot of volatility, not a lot of clear-cut direction. If you're a short oil, you did all right. Short Aussie, it probably did alright, but apart from that, been very difficult to predict any sort of direction this week. These kind of weeks, if you can get out flat, get out break even, you've probably had a decent week. So we'll be back again next week. We'll have a week ahead video on Monday, so do tune into that. We'll break down what we think heading into next week then. But ultimately, relatively tricky trading conditions this week. Move on from this week, have a good weekend, recharge the batteries, and we'll be back next week for another week of trading. Thank you.